Okay, I'm going to go through a random pair and just give you a idea of how I analyze the markets and come to an opinion about it. So my opinion isn't always which direction it's going to go. Sometimes I don't know, especially on the lower time frames, right? So yeah, I was just looking at this trade, this paper position on the 30-second gap here. Anyway, come back and have a look, but a nice volume gap. So let's pick a random pair. Okay, how about Euro, New Zealand dollar, maybe. Okay, let's have a look on FXCM. Okay, so I'm gonna start. The 12 month, if you do not have the higher time frames, then it is what it is, right? There's nothing you can do. I think it's worth it to invest so you can do that. I mean, you want to get into the very lucrative industry. If you can't spend a few bucks on having access to these extra tools, then find a way to get it for free or just pay for it. Okay, I'm not sure. I think the most basic plan allows for it. So just have a look. Okay. All right. 12 month. Let's see. So we had a breaker here. Price came up, took out that high. Price broke down, and now we expanded up. It's on the yearly chart. Okay, 2020 was COVID. We came down to this breaker, and now we're expanding up. And it looks like we're expanding up on this time frame. Okay, no PD, no gaps over here. I do like to look for gaps. Okay. All right. So on the 11 month, we do have some gaps. Create a gap here, and on just in January, and then from January till December, and then moved higher from there. 10, 9. Let's just go down to 6. Okay, 6. Nothing too clear. All right. So 6. What does my eye catch? Okay. Relative equal lows. This liquidity on the sell side. So we had price come into the gap very lightly. See over here. I'm going to illustrate this. Let's see if there's a lower time frame gap, I'll probably use that instead. But this relative equal lows look very nice. So we made a gap. Price came into the gap. Price then expanded up, and then one more time, taking out this high. So it took out the liquidity here. Highlight this in red maybe. So it took out this liquidity, and now it's come down below the midway mark. So let's find more information. And we have this general order block here on the 5 month. Okay, I'll move this first. So let's go to the 4 month, which was recently created this month. Okay, 5 month. Let's go back to 6. Okay, 5 month has the gap, still has the imbalance of the gap. 4 month, no gap. 3 month, no gap. 2 month, 1 month. So you see price created this equal highs, took it out, big expansion lower all the way down here. And we're so close to the sell side here. And we have the equal lows here on the monthly as well. But these equal lows are very interesting. Okay, that's what I'm looking at. And when you see things like that on any time frame, you see price take out the buy side and then retrace all the way down, uh, even with more momentum than this candle, if you include the wicks. And now we're here. Okay, this is not a green candle yet. We didn't finish forming, right? But the sell side here, that looks interesting. So regardless of what time frame you're on, that's a target, right? Step one, find a target. I almost missed this here. This inversion fair value gap. Okay, I'm going to highlight it in a different color. IFG 1 month. Okay, so this month's not closed yet. It's not closed yet. We had a big disrespect of the gap here and then here. From my experience, a lot of the time, not always, but the next candle after two disrespects, like you're not following at all, is usually the one that kind of respects it. This went extra high, so we still have 10 days left. All right, 10 days before this monthly candle closes. Let's go down the time frames now. Okay, we have a gap here on the 3-week. Okay, let's go find more information on a lower time frame. We have a 3-week, possible 3-week inversion gap here. Okay, pretend that's a 3-week here. So if price, that'll be a nice inversion gap setup. If we get close to 3 weeks somewhere here, I'd look to find a short in here when price returns. Targeting there. How many pips is that? It's over 350 pips. You can wait for confirmation on the lower time frames and catch a move and be in that same direction, right? 7 days for this 3 weeks to close, which will be a new month as well. And then we'll have this gap. If it doesn't come up here first, this gap's not formed yet until candle closes. Okay, likewise, there's also a 2-week gap that can be treated as an inversion gap. See this gap here? It's came into this gap. Now it looks like it's going down. Okay, so let's highlight this. Going down the time frames, relevant PD arrays. Okay, created that. So when we have a bullish PD array, we do not want like a bullish fair value gap. We do not want to see a bearish fair value gap get created. I'll flip the chart as well. This is what it looks like in a bullish scenario. You do not want to see that. You do not want to see a PD array get traded into, and at the same time, it creates another opposing PD array. So instead of thinking this wants to go higher or lower, basically higher, it seems quite possibly coming down for the sell side. Okay, because likewise, with the same amount of momentum it went up, it came down. The same amount of speed. All right, it's not crawling down. It's not crawling down. Let's go to the weekly. Okay. So that was a 2-week. That got traded into, and the weekly. All right. So gaps. Good. And this is what the weekly looks like. We're 14 hours. If we close the weekly bearish, and we have this bearish order block, and this gap, which includes the gap. Price can trade into the gap and then move lower by all means. So we go down the time frames, 4-day, and we see a 4-day gap here, respecting it. Very nice. 3-day. Okay, look at this. 3-day inversion gap. Well, let's look at this one on the lower time frame, all right? IFG 3-day. What am I doing? Color change. Okay, so we didn't close completely below, but relative equal lows here, very close to this one. We're bearish, right? Following the higher time frame gaps. Look, there's even a 3-day here within the 1 week. Okay, so this is more like can be a refined entry. A lot of consolidation here, which can be quite scary on the hourly time frame, because this took like 10 days of consolidation, as we'll see. This is an immediate target here. Two-day. Okay. 1 day. All right. Look at this. Look at this. We're going down. Nice breaker here. This is really nice. I like the structure. Create up, goes, and it breaks down. And we have a gap. We have a gap. We're going down the time frames. And look, we're what do you call it? Zoning in on what's happening now. Is there something can we figure out? And it's going good. So now we're here. Okay, everything's following up pretty nicely. So we want to get down to here, sell side here, looking for a potential return to here, which this entire area would be, mitigation block or bearish order block if we get a good close down here. This gap was used. Okay, gaps can be used once. It can be used once like this. It might be a higher time frame gap if it uses it and then goes up. You have to have a look through the time frames. But generally, it already came into this gap. Okay, so looking for inversion gap. CB. All right, let's get on time frames. See this order block here? This does not look like this order block is being very bearish PD array. Gap with a breaker trumps this order block. Okay, 12-hour. Small order block here, plus this general mitigation block. There's multiple PD arrays. 8 hours. Okay, 4 hours. 1 hours. All right, let's follow the PD arrays. 1 hour gap. Okay, see the breakdown. It could have been a trade in there because it came into its daily CB. So you see that, and then you don't know when. You see the rejection. No more confirmation. Wait for a higher time frame. Got a 1 hour. It's breaking down. 15-minute. So you see on a 15-minute, there's no gap here, but there is this nice breaker here. Okay, so sometimes when there's a lot of candles like this, and the PD array, there's an hourly gap there, but on the 15-minute, there's no gap. Okay, it's quite efficient here, but not efficient enough for the 1 hour. 5-minute, still crawl up, and then a breakdown. Either using this as an inversion gap, or perhaps one would just buy here, sell here and there because it's at equilibrium. Okay, when you see a lot of structure, it will usually come back to equilibrium at least, if not like an OTE level. All right, for a couple of candles, maybe not. So OTE is here, 62, 70.5, and 79. It comes up to equilibrium, to a premium. It's good. Signal to sell, right? Smart money does not buy at premiums and sell at discounts. So in the 1 hour, it goes down. Up. Turn on the time zones. Euro, New Zealand dollar. So we get a move during Asia. Asia opens, and then 920. Okay, if you're really confident, you came to this daily order block. Very confident, you can sell at low risk. Sell in here. If you need more confirmation, you're waiting on the hourly over there. And it's nice that we created this bearish order block here. This is what I use my order blocks. And then I just label it like this, minus OP 2 hours. And of course, you can set the visibility. I haven't done this for any of those. I like to keep it clean, else it'll be too messy. Like here, this is a 1 hour. Okay. So, all right. So PD arrays, PD array matrix on the same time frame. You go to the hourly. I'm gonna turn off the kill zones sessions. I'll turn off this one too. And you can see even here, it pumps back up to a premium from this top to this bottom. Whatever it's up to your strategy, right? Have a strategy, and eventually you'll create a strategy that you want to follow, and then you just follow it. You're not risking too much. It's boring, but it works. Okay, have fun with the money you make, not in the charts. Like don't come to the charts for your fix, for your drug fix, for your gaming fix. To get away from your family or girlfriend or colleagues or whatever. Keep it clean. Do not shit where you eat, as they say. So yeah, target down here and study for yourself if it actually gets there. So how many pips this year? I mean, if you take this 1 hour gap, about 60 pips. I like to take entry at the beginning of the gap so I don't miss it. 62 pips, very nice if it's leverage. Yeah, think about pips instead of like how much profit you can make. Okay, think about how many pips you can get. 62 pips is nice. If you miss that move, where can you get entry? Okay, so we have this 10 minute maybe. 12, 15, 20. 16 minutes, 20 minutes, 30 minutes. All right, there's a little breaker here. Disregarding the bodies. If you want, if this is your strategy, wait for the low to be created, some structure, and then wait for price to come back into equilibrium, or at least very near to it. Not in the lower time frames. Sometimes you don't get an entry. Sometimes you just got to mark it in. There's a big void here, and nobody says there's to come and fill it. It's quite efficiently offered price at this level, so now he wants to leave it. It's like, okay, everybody's in the game at these different price levels. It doesn't have to hang around to offer it for very long, right? Because you don't want people to get in, and when price is delivered efficiently, it can leave it, and there's not much structure here, so it's very low resistance. Okay, just one little, just very little structure, and all this can be eaten up on the way to the target. Right? Go back up to time frames again, 4 hour. So if I turn off everything, okay, on the 4 hour, I got a 4 hour gap following. Without your annotations and slowly finding out where you are in price, it can look a bit confusing. You don't know if it's going up or down, and you get scared. But the main thing is to find a trade. All right, it's not about knowing where price is going to go. That doesn't make money. Trading obviously makes money. So have your trade and what you're willing to risk. Don't over risk. If you're wrong, you're okay being wrong. You don't feel a sting. All right, and then you get used to that, and then you slowly desensitize yourself. Then eventually you can risk a bit more, or you have more confidence. And in trading, the wealth you grow is through compounding. and there's funded accounts, prop firms, so you can just build, you can just keep, just make a little bit of money, and then you can buy a new account, and then that you can be managing a million, 10 million in funded capital. Technically, not that much because the drawdown is only 10%. So if you have a million in funded capital, you can consider it like 100,000 of like real capital, although it's not yours, but the money you can make. Okay, and you don't want to be dealing. You can't jump into dealing with being $5,000 risk kind of trades, and it's going against you. You get stopped out, and then you get a bit crazy, right? So yeah, so this is a target for that inversion, daily, and then this inversion 3-day gap, right? That was the whole basis of this. The 3-day we saw was green, I think. So into here and then down into here. Low hanging fruit on this time frame. You go to the lower time frame. You want to know like, oh, how do people do that? I cut such a big move. That's amazing. Let's say they get in here and then stop loss. And then, they're targeting down here. Or wherever, even down here. Like, wow, such a good trader. Man, I wish I could do that. And yeah, the understanding what the higher time frame is doing. And it's not about any individual trade, right? It's not, you don't put your trades on like a trophy. You can be proud of it and journal it, but don't put too much emotion into any winning trade or any losing trade. Consider it a trade, makes profit, great, part of the business. Okay, part of operations. Yes, you made profit today. If you have a restaurant, okay, got a lot of customers today. Great. Some days, oh, not many customers. What can you do to improve your business? Okay, you don't celebrate for every single customer that comes in. Like, wow, look at this guy spend $100 at my restaurant. Oh, so take a picture of him, put it on the wall. Look at this guy. Then next guy spends $10, and he's feeling upset about it. Focus on the bigger picture. Always focus on the bigger picture, and trade what you know. If you don't know, don't force it. Don't like, I see a gap. If you feel scared and you're not confident, don't take the trade. Just don't take the trade. All right. And if you're wrong, you stopped out. Take some time off. Don't jump into the next trade. If you go into a price chasing, sometimes price is in a something like this, and you don't know where it's going. Here, it's obvious. You see everything already. But if you're watching it print live, it comes down, you're trying to get short, it comes up, and then you're just doubting yourself, you don't know what's going on, and you're lost, and people need time to um reorganize their thoughts. So yeah, euro New Zealand dollar, framing a trade based on that inversion 3-day gap, and it may be quite possible that we come all the way down here and attack this sell side here. All right. So yeah, let's see what happens. And yeah, good luck.